Hello, everyone. Welcome to this week's episode of Investment Trends, where we discuss everything that's going on in the stock market and the economy. So, for the first week of May, we had some big news come out from the Federal Reserve as they made their decision on interest rates. So, this week's meeting was pretty interesting because what we've seen from the labor market and from the stock market, also taking into consideration that we have sticky inflation that's out there, a lot of people were focusing on what Fed Chair Jerome Powell would say in his meeting this past Wednesday. And one of the things that has shifted from his previous couple of meetings is that he discussed that he believes that interest rates have peaked. So instead of a lot of investors waiting to see if he will cut interest rates, it was actually a relief for the market that he stated that interest rates have peaks and they have no intentions of increasing interest rates in the near future. He still gave no timeline on possible interest rate cuts, which has many to believe that we may not see any interest rate cuts at all in 2024. The current interest rate is pretty solidly above what the inflation rate is at this time. So we're still in a bit of a hawkish environment for the Fed. There are many that lead to believe that these higher interest rates will start to have an impact on things like infrastructure, real estate, and manufacturing that we could see over the next year or so. Also in the news has been the first quarter earnings report. So through Thursday, the majority of the S&P 500 companies have reported earnings, and so far, 77% of those have topped their earnings estimates. Over 60% of those have topped the revenue expectations. So we're seeing some good indications from the S&P 500 companies as they have been reporting earnings. One of the bigger stories in the news on Thursday was when Apple reported earnings on their stock. So, one of the biggest struggles that Apple has been facing has been slower revenue. So, they have seen iPhone sales drop by as much as 10%. However, the stock is rallying on Friday because Apple has announced that they are going to do their biggest share buyback ever at $110 billion worth of shares that they will be buying back. One of the things that they also announced is that they see revenue growth in the future. So they're forecasting improving sales for their iPhone and other products going forward. That led to the stock being up early Friday morning over 6%. So shifting gears into some other news from CBS News, the IRS has announced that they are going to have a surge in new audits that come out. So who are they targeting with these new audits? They're targeting large corporations, they're targeting partnerships, and high net worth individuals. One of the things to note that they said is they plan to increase audits on high net worth individuals, so individuals that have 10 million or more in assets, by as much as 50%. They also tend to target partnerships that have assets of 10 million or more, and that we could see 10 times the amount of audits on those partnerships. So for business owners that are out there, for high net worth individuals, as you can see, they are going to be highly increasing the rates that they are performing on audits. Also in the news, this may affect many retirement plans that are out there. So BlackRock has announced that they are going to start adding annuities into their target date funds. So if you have money in a 401k plan and your default investment option is a target date fund, if you're using BlackRock funds, they might start to include annuities. And one of the reasons behind BlackRock stating that and how this could be a benefit to individuals is it could give individuals a fixed income stream in retirement by having these annuities baked into their target date funds. A couple of things to be aware of, and a couple of things that I'm a little skeptical around this is one, the liquidity of how soon could you get money out of that target date fund if you do own an annuity. Two, what would happen if interest rates start to drop? So annuities that may offer a variable rate within those, or even a fixed rate in new issues of those fixed rates. What would happen if interest rates start to drop? Would that mean significantly lower income for those invested in those products? And lastly, what would the fees be? So if you have a target date fund that's an index target date fund, the fees might be as low as 4 to 5 basis points. If they start to include these annuities within the target date funds, will we then start to see higher expense ratios in these mutual funds. Annuities have different layers of fees. It is an insurance product, so there are actuaries that are involved because they have to factor in things like life expectancies. So what would that do to the internal expense ratio for some of these target date funds if you start to add annuities in them? So something to be aware of and something to check your 401k balance in the future. If you have Blackrock funds in there, look and see if there's annuity wrapped into those. I do think that for individuals that are looking for an annuity, there's enough people out there where they can find an annuity on their own, whether that be within an IRA or in a taxable account, that you can get the income that you need. And for those that really want annuities, to where that might make sense. However, just throwing them into a 401k plan and many investors being blindly have their funds invested in annuities may not be a great solution. Honestly, it seems like a way for BlackRock to increase their fees and potentially make more money. So lastly, one of the things to consider within your portfolio is looking at alternative investments. So alternative investments take several different forms. These could be private equity funds. These could be hedge funds. These could be private credit. They could be private real estate. So statistically speaking, if you do have a percentage or a portion of your balance of your portfolio into some of these alternative investments, over the long run, it tends to lead to outperformance. It's also a way to add some more diversification so that because a lot of these alternative investments are not correlated to traditional stocks and bonds. So it can be a good way to diversify your portfolio, could enhance some returns over the long run. So if you have any interest on what types of investments are out there outside of just traditional stocks and bonds, please reach out to me, leave a comment below. We'd love to discuss those with you. So that's what we've seen for this week. If you like this video, make sure you like it. Just leave a comment if you're seeing other things that are developing in the markets.